Good morning to all students. Today we are going to learn Financial Accounting, Grade 11 CBSE. Last class we had completed Introduction to Accounting. In that chapter we had completed Meaning of Accounting, Definition of Accounting, and characteristics of accounting. Last class we had seen in part of the introduction to accounting, and also in chapter journal we had also learned introduction of journal. Today I am going to continue another part in introduction to accounting and also journal. Okay, today we are going to learn what are the objectives of accounting. What are the objectives of accounting? I had already told accounting is very important for business. So today we are going to learn what are the objectives of accounting. First, number one, maintaining accounting records. Maintaining accounting records. It's a very important objective. The reason is, in accounting, the company maintain various records regarding business. So maintaining accounting records is very important objectives of accounting. Number two, the next objectives of accounting is determining profit or loss. Determining profit or loss. Any business object or goal is to earn more profit. So the accounting only the process to determine profit or loss of the company or of the business. The third objective is determining financial position. Determining financial position. So every company wants to develop their business every year. They want to raise their production as well as profit. For wants to take good decision, we must require, or the user of accounting required, the important part is financial position. So the accounting object is provide financial position to the users. So it's also very important. Fourth one is facilitating management. This is also very important. So every management wants to know the position of the financial. Only that they will take decisions or judgment. So this is also very important objectives. Next important objectives, providing accounting information to users. Accounting information. So the other important object of accounting is to provide accounting information. Only business required the accounting information, then only they take any decisions. Or they prepare budget, forecasting the profit or loss. So the providing accounting information is also very important to the users or management. The last objectives is providing business or protecting business assets. Protecting business assets. The accounting shows a business assets. The accounting required more business assets. So the accounting protecting the business assets. That's why they prepared a balance sheet. What are the assets the company maintaining? So the other important objectives is protecting business assets. So these are the objectives of accounting. The next part is functions of accounting. Functions of accounting. What are the functions of accounting? The first function is maintaining financial accounting records. Maintaining financial accounting records. The main function, they maintain financial accounting. Accounting, the very important recording the transactions. So accounting helps to maintain various systematic accounting records. The number 2, preparation of financial statement. Preparation of financial statement. In accounting, we must prepare trading account, profit and loss account, and balance sheet. And also there are various accounts, cash book, petty cash book, subsidiary books. So these accounts are help to the management or the users for the to show the financial statement. According to the financial statement, the management will take decision to improve their company or organization. So preparation of financial statement is also very important functions of financial accounting. The third one is meeting legal requirements. Meeting legal requirements. Accounting is also very important for legal requirements. That's why any company, any large scale business, they appoint one legal advisor. If any problem in financial side, the legal advisor required what are the accounting system you are maintaining, show your profit and loss, everything they will ask. So they will help the management. So meeting legal requirement is also very important function of the accounting. Next, fourth one is communicating. Fourth one is communicating to the financial information. So every management or every large scale business owners are required financial information every year, because then only they will take decisions or they discuss or take judgment how to raise our level, of the business. So the other important function of accounting is they communicating financial information to the users or management. The last function is assistance to management. It is also very important. So first I had told every business accounting is very important. Every business required accounting is very important, because the accounting only assists to management. According to the accounting reports, according to the financial statement, the management will take good decisions. So these are the important functions of accounting. So today you must know what are the objectives of accounting and also what are the functions of accounting. Okay, right. Today I am going to another part in journal. Last class I had told what is journal. Journal means debit and credit is equal to journal. And also how to we find out what account is debited, what account is credited, we must use three rules. Last class we had seen what are the three rules. Debit and credit. What comes in as a debit, what goes out is a credit. All expense are debit, all gain is a credit. Receiver is a debit, giver is a credit. Okay. Today I am going to teach some other transactions. So, for example, Sam commenced business with cash rupees 90,000. So this is called a transaction. So you must understand the meaning of the transaction. Sam commenced a business with cash rupees 90,000. So Sam is the owner of the business, proprietor of the business. So we are maintaining accounts. So we must think ourselves, we are accountant of the company. So Sam gives 90,000 cash for business. So what we will ask, what comes in? What comes in? Cash comes in. Comes in is a debit. So cash account data to who is the giver? Who is the giver? Sam is the giver. So giver is a credit. So to Sam account. Here don't write Sam account. Reason is the first contribution to the business, that amount is called a capital. That amount is called a capital. Hence, you don't write simply Sam account. You must write Sam's capital account. Sam's capital accounts. So inner column 90,000, outer column 90,000. Narration, if you want, you put being or Sam commenced business for cash, or Sam contributed rupees 90,000. So this is very important journal. This is the first journal entry in every sum. So first contribution amount is called capital. So without capital, we can't do any business. So the first entry, it's called a contribution entry, journal entry. Okay? Understand? I had already told, if you have got any doubt, please call me. Okay? Right. The next example. The next very important example, in purchase, there are two types of purchase. In purchase, there are two types of purchase. One is called cash purchase. The other one is called credit purchase. So cash purchase, credit purchase. So how do we find it is a cash purchase or it is a credit purchase? Suppose if it is a cash purchase, the transaction is purchase goods. Purchase goods for cash. Purchase goods, for example 10,000. Purchase goods rupees 10,000. Purchase goods from Arul, rupees 10,000. These three transaction comes under cash transaction. The reason is purchase goods for cash, so it is a cash. Even purchase goods, there's no cash or from no name, it's also cash purchase. Purchase goods from Arul for rupees 10,000 for cash. This is also cash purchase. So these three transactions is cash purchase. The reason is here also cash, here no cash and also no name. So this is a cash purchase. The third one is purchase goods from Arul for cash. So this is also cash. So for this, what is the journal entry? It's called a cash purchase. So in cash purchase, we must ask what comes in. What comes in? Goods comes in. Comes in is a debit. I had already told in accountancy, we won't use goods account. In the term of goods, you must use purchase account data to what goes out? Cash. Narration, goods, purchase. Goods purchase. Even you can write goods purchase for cash. It is not, please don't mug up the narration. Only the meaning of the transaction. Even you can write purchase goods for cash. Okay. So this is a cash purchase. Okay. How do we find credit purchase? How to we'll find credit purchase? Credit purchase means purchase goods for rupees 9,000 from John. So this is a credit purchase. Why? Here no cash. Here only one name. If name only comes, it's a credit purchase. We are purchase goods from John on credit. It is understood. It is the meaning of the transaction. So then what we will ask? What comes in? Goods comes in. Comes in as a debit. So in the place of goods, you must write purchase account data to who is the giver? John is the giver. So you must credit John account. Narration, purchase goods on credit. So in inner column 9,000, outer column 9,000. Otherwise debit column, credit column. Okay. This is a very important. In purchase, there is two types of purchase. One is called a cash purchase. The other one is called a credit purchase. Okay, right. Now, we are going to see the other account is called a sales account. In sales also, there are two types of sales. In sales, there are two types of sales. One is cash sales, the other one is credit sales. The same. In cash sales means sold goods for cash. It's a cash sales. Next, sold goods for rupees 1,000. It's also cash sales. Sold goods for cash to Mohan. It's also cash sales. Here cash, so it's a cash sales. Here there's no cash and also there's no name. So this is also cash sales. Third one is sold goods for cash. So it's a cash sales. If cash sales means what we'll ask, what comes in? We have sold goods for cash. So we are receiving cash. So what comes in? Cash. So comes in as a debit. So cash account data 2. What goes out? Goods goes out. In accountancy, you won't use the word or you won't use the term goods. So we are sold. So here you must write sales account. Narration, goods sold for cash. So how much? 1000 in debit column, 1000 in credit column. This is a cash sales. The other transaction, credit sales. How to find credit sales? Credit sales means sold goods to Bob, rupees 5,000. So here there is no cash. Here there is no cash. Here only name. So this transaction is credit transaction. This sanction is credit sanction. So what we'll ask, we are sold goods to Bob. So what we'll ask, what goes out? What goes out? Goods goes out. Who is the receiver? Bob is the receiver. Receiver is a debit. So you must debit Bob's account data to what goes out? Goods goes out. Goes out is a credit. So you don't write goods account. You must write sales account. You must write sales account. The narration is sold goods. Sold goods. So amount is 5,000, 5,000. The amount is 5,000, 5,000. That's all. Okay. So today you had seen in the first part theory what are the objectives of accounting. The other part is what are the functions of accounting. Okay. So what are the objectives of accounting? I had already told. Maintaining accounting records, determining profit or loss, determining financial position, next facilitating management, the next providing accounting information to management or to users, and also protecting business asset. So these are the objectives of accounting. The next part is functions of accounting. What are the functions of accounting? Number one, maintaining accounting records systematically. Number two, preparation of financial statement, that is trading account, profit and loss account and balance sheet. The third one is meeting legal requirements. Fourth one is communicating the financial information. The fifth one is assistance to management. So these are the important functions of accounting. So this is the theory part. In account side, journal, recording side, the first part is journal. So in journal, I had already told how to find out debit and credit. There are three rules. I had already told the three rules. What comes in is a debit, what goes out is a credit, all expense are debit, all gain is a credit, receiver is a debit, giver is a credit. So last class 6 examples I had shown, I teach you. Today we learn capital contribution. First, capital contribution. Next, purchase. In purchase, there are two types of purchase. One is cash purchase, the other one is credit purchase. The same sales, there are two types. One is cash sales, the other one is credit sales. And also we learn how to find out credit purchase, credit sales, how to find out cash sales. I had told you, purchase goods for cash, it's a cash purchase. Purchase goods for rupees, it's a cash purchase. Purchase goods for cash from Ravi, it's also cash purchase. Suppose purchase goods from Kumar, it's a credit purchase, because in the transaction name only available. Okay, understand? The same thing in sales. There are two types of sales: cash sales, credit sales. Cash sales means sold goods for cash. Sold goods to Babu for cash. These are cash sales. Suppose sold goods to Babu, only name in the transaction, so it is a credit sales. Okay, students, I think you all understand the introduction to accounting and also one part of the journal. We continue to the next class. Okay, thank you.